Okay, audits. Everybody's favorite subject, right? So just we'll go through some very basic things like what is an audit. Today I'm going to talk about mostly the financial audit. There are other types of audits, but today we're going to talk mostly about the financial audit. It's a formal review of your organization's financial records. Formal review meaning it has to be done by an outside accounting firm. I'm usually hesitant to use the terms always, never, etc., but audits are always done by an outside independent CPA firm. So what does an independent firm mean? It means that it should not be somebody on your board. It should not be your brother-in-law, sister-in-law, neighbor, etc., somebody who cannot give a clean view of your financial records. And it shouldn't be a major donor. If you have a CPA firm that likes to donate money to you, do not ask them to do an audit. And then again, we talked about this earlier too, your audits always conform to GAAP, your generally accepted accounting principles. There was a question over the break, when should you do an audit? I'll talk about that a little bit further, but I wanted to acknowledge that question came up. So, why is an audit important? It can help you identify inefficiencies, and along with that, ways to improve your operations. It can help prevent fraud. It's critical to know that an audit will not always detect fraud. So if you are concerned about something in your organization, it's critical that you talk to your CPA firm as you're going through the audit process, because if they don't know that you have concerns or something specific to look at, they may or may not uncover something that's happening in your organization. But they can help you prevent fraud in the future by setting up internal controls and other processes. An audit's important because it might be required for grants or other funding. And then it's just a good practice for financial transparency. What happens during an audit? Is there anybody here who's never been through an audit? Okay, that's great. Audits aren't scary. They shouldn't be scary. Okay, what happens during an audit? They're going to come in and review your accounting practices. And when I say they're going to come in and review accounting practices, they ask you everything. Who opens your mail? How is that mail routed when it's an invoice? Who approves it? Who enters it into your accounting system? Who signs the check? Who writes the check, etc.? Some of those processes have changed over time as invoices come in electronically. So who's going to review that? Who receives it? Those processes change a little bit. And then, of course, with online banking and that sort of thing, they're going to dig into all of those things. They're going to evaluate your financial reports. And this is just a snapshot of a few. It's not an extensive list. They're going to look at your bank balances. They're going to look at your income, your expenses, your liabilities, your fixed assets, your depreciation schedules. They're going to look at everything. Again, kind of going back to what I talked about just a second ago, they're going to review your internal controls, and they're going to test it. They're going to walk you through different processes and that sort of thing. For example, who approves payroll? Who approves increases in salaries so that one person isn't doing too much? Who has check signing authority versus the entering of expenses and that sort of thing? There's a question.
Is there a way to identify internal control practices that may be challenging or may flag itself prior to the audit? So like, say for instance, paying checks online through the bank itself versus using a paper check. Is that better or worse? Or, what's...
I think most would tell you that online checking is safer because that physical check can be intercepted through mail, modified, that sort of thing. But with that, the caveat of what IT controls do you have in place? Do you have proper IT controls to make sure that you're changing passwords frequently so that somebody can't hack into your system and get into your online banking and that sort of thing? It's becoming more difficult, but it's becoming more of a challenge too because online issues are only increasing.
Where could you find some place that would have best practices or really good practices for those nonprofits and
if
stuff?
you haven't had an audit, they will they'll go through all of that and they'll make recommendations. I'm sure there are best practices for, when you write a check versus not. Your CPA firm is going to be your best resource, in my opinion, if you have an audit. Is there another question?
One question. Founders, nonprofits, organizations, the audit is more expensive. And since the government have went up to $1 million for requirement for single audits, I'm just wondering about foundations and other organizations. Would they go up to that million or because a financial review, I understand we need to have something, but a financial review is a whole lot cheaper than an audit. And a lot of times, if you only got a couple $100,000 in money, you done spend probably $4,000 or $5,000 on an audit. So I'm just wondering, in the future, what foundations and other organizations that we get money from, would they require a finance review versus the audit?
So that's a great question, and I actually address that later in what do funders look for, what are some other options and that sort of thing. There is a difference between a $100,000 revenue organization and a $1 million revenue organization, right? And if you're getting federal grants, there are different requirements for that as well. I think it's just in another slide or two where we talk about like some kind of best practices or some kind of trigger points, I guess, of, when should you consider an audit? And then the other options for financial reviews, compilations, and then even if those are beyond what your organization wants to do because you literally are just starting, what are some other things we can do? So if you can hold on just a half a second, we'll get there, but I don't want to lose your question. Anything else before I keep going here? Okay, so they are going to also review your policies and procedures. IT is becoming a big thing. As everybody knows, the cyber attacks are only increasing and that sort of thing. So they're going to look at your IT, some of those processes, and then just making sure that you have policies in place to protect yourself against some of those things. And then at the end of the audit, they're going to make recommendations on adjustments. Again, some of these just go back to making sure that your statements are GAAP, according to the generally accepted accounting principles. And it's okay that you have some of these as long as you know that they're expected. I would just say that as long as there aren't like a significant amount of them. If there are a significant amount of them, like you might want to change your accounting practices throughout the year. The audit process, the first thing you're going to do is you're going to engage your audit firm. You'll go through an extensive planning process. The field work is probably the most extensive from a time perspective, reporting, and then your follow-up and closeout. The engagement phase. You're going to identify what services are performed. Are you going to do a financial audit? Are you going to do a review, a compilation? And I get into that a little bit deeper in the audit session. A financial audit is the most extensive, and it's obviously the most expensive, review of your financial statements that you can have. A financial review is going to be less expensive. A compilation is even less expensive. Compilations do not get into your internal controls and that sort of thing. So it's really just a level of review within your organization that you want to have looked at. A compilation is okay, especially for younger organizations or smaller budget organizations. And a CPA firm is just literally going to take your financial statements. They're going to look at them to make sure that they make sense, that they're presented appropriately, but they're not going to test things. They're not going to ask you for copies of invoices and do actual tests within your accounting system like an audit would. Identify what services will be performed, or I'm sorry, where it'll be performed. There's been a shift, if you will, probably more prevalent since 2020 with the COVID pandemic, where auditors are preferring to do more off-site audits. They can work. I'm not opposed to them. Personally speaking, if you've never done an audit, or if you have a new audit firm that you're working with, I would really encourage you to push them for an on-site. Especially if you've never been through an audit. It's really hard to develop that relationship and feel confident in your accountants if they're off-site in an office somewhere where you're just Zooming with them. It's just a different process. So off-site isn't necessarily bad, but I am a firm believer in developing that relationship, having them sit in your office, you look them in the eyes. It's just a different process. The engagement phase is going to identify who within your organization is responsible for different processes along the way. It could be 1 or 2 people, it could be 3 or 4. It's just really important to identify that up front. Again, the scope of services for the auditors. What are you asking them to do? Is it just an audit? Are you asking them to file your 990 as well? Are there other regulatory filings that you want them to assist you with? So what is the scope of services? Fees. Again, fees are expensive for audits, but if an auditor comes in and tells you they're going to do it for $2,000 or $3,000, find a different accountant. I'm going to be real honest with you. Get somebody that you get what you pay for in an audit, and you're not going to be happy if you get the low ball for a couple $1,000s. The engagement phase is also going to identify the start and completion date. This is really important for organizations who maybe you need your audit done by a certain time for your board to review it, for a funding deadline that's coming up, and it's really important for you to have that audit because it's important for you from an optics perspective to show that auditor or that funder that you've taken this step, and it just might be important for you to do that. When should you start looking for an auditor? There's a planning part that comes with engaging an auditor if you've never done that. I would encourage you to start early. And I think I talk about that later, but that was a question that came up during the break. It takes time. If you're going to do an RFP process, if you want to interview them, if you want to talk to other organizations that have maybe used this audit firm, or reach out to peers and find out who they've used, it takes time. Auditors are busy. They're not lacking for work. They're going to be more picky because there's just a national shortage of accountants coming out of school, and it's a challenging process. The next phase is the planning phase. This is where you're going to develop your timeline and deadlines. It's really important here to be realistic. Audits take time. I can't stress that enough. But be realistic and make sure that you're not staying up till midnight, multiple nights, trying to get stuff done just because your timeline wasn't realistic. There's a document gathering phase here. This is going to be a long list. They're going to ask you for things that you never thought an auditor would want to look at. And it's going to be anything from bank statements, invoices, leases, contracts. It's a very long list, and it's going to take some time to gather those documents. You may have a pre-audit meeting with your firm. You want to know who their staff is, who your staff is, and get them together so that you can manage the expectations of the audit process, especially during the field work. Again, if they're off-site, I think it's really critical to understand their technology. You do not want to be sending them financial information via email. You want to make sure that their site is secure, that they have some kind of a portal where you're uploading documents and that sort of thing. Because if you're just sending things via email, you are putting yourself and your organization at risk by sending that information in an unsecured way. In logistics, if they're on site, you need to make sure that they have a space to work, that they have proper Wi-Fi, and some confidential space, because they're looking at a lot of information that you just don't want everybody to have access to, so you don't want them sitting in your main lobby, I guess is the point there. So the fieldwork portion of an audit is the most time-intensive phase for your staff. And it's a very, very it's almost an invasive process. You feel like somebody's coming in and looking at everything you do, and they do. But again, they're looking at your grant documents, your application, your agreements, your reports, contracts, leases. They're going to ask you for payroll information. They're going to test your payroll. They're going to test that you're paying your payroll benefits, for example, if you have a 401k, 403b type thing, they're going to test all of those things. They want a list of your assets, your fixed assets, and the depreciation schedule that goes along with that. They're going to look at your board minutes, finance committee minutes, whatever, any kind of committees that you have. They're going to ask for the minutes for those. They're going to ask for policies. This is not an exclusive list, but just know that that list is long. During the fieldwork portion, they're going to talk to staff. So if you're the finance director, CFO, know that they're going to talk to the CEO. They're going to ask other staff, are you aware of any fraud happening within your organization? They have to ask those questions. They're also going to do a legal representation letter, which is a letter that they send out to your legal counsel if you have legal counsel engaged, and they're going to ask them the same questions. Are you aware of any fraud? Are there any pending litigation that you're aware of? It's a multi-page letter, so I'm sure I didn't do it justice, but they're asking all those critical questions that could impact the financial status of the organization. During the field work, again, they're going to do that internal control testing. Again, it feels invasive, but it kind of has to be. Again, just know that this is a time-intensive process. Be prepared for it. For anybody who was here yesterday, I apologize that this is so redundant, but don't plan vacation the week before the auditors come in. You will regret it. Just know that you have to plan for this. And plan it at a time where maybe your office isn't as busy or your time isn't as busy. Don't plan it the week before a board meeting. You'll regret it. Reporting. The reporting phase of an audit, this is where the auditors are going to come in and present the report to your staff, most likely an audit or a finance committee before it goes to your board. And then they're going to report it to the board eventually. But this is the time where you get to ask questions. You get to make changes potentially. So your audits are going to include footnotes, and those are your footnotes. They have their requirements, and they're not going to change certain things, but something might not make sense to you, or something might need more clarification. It's really important that that staff is involved at this level, because these are your reports. These are telling your story of your organization. So it's really important that you review these, ask questions, and really connect with your auditors to make changes if you feel like they need to be made. The management letter, this is where they're going to send a letter that's attached to your audit. It identifies possible areas where you might want to make improvement. Again, those internal controls, just processes, that sort of thing. And then it will also identify material weakness, or point out the material weaknesses or significant deficiencies that they've identified through their field work. What's a material weakness? A material weakness is something that if they feel like somebody who is reading your financial statements, if it changes the view of the perception of those statements in a material way, meaning you change your perception or you make a different decision based on those, they're going to note that. The follow-up and closure, this is where the board meets with your auditors. In my opinion, your boards and your auditors should be meeting privately for at least a period of time. They should meet in executive session or whatever your organization does as a best practice, but they should do this without staff present. It's really critical that your boards have the opportunity to talk to them. Was management forthcoming with information? Were there any issues incurred during the audit? Were staff difficult to work with? Those types of things. So it's really important that boards have that opportunity. They're going to go through accounting policies and especially recommendations. And again, if there were material weaknesses identified in previous years, have you made those changes? What steps have been made? They want to talk to your boards. At the end of all of this, the board accepts the audit report. They don't approve it, they accept it. If they don't, then that's a whole different issue. But generally, that's what should happen at the end of that. What is in the audit report? The first page is going to be your audit opinion. It's going to give either a clean opinion, or if they feel like there are still material issues within your report, those will be identified in your report. Then it gets into the actual financial statements. The statement of financial position, again, that's your balance sheet, your assets, your liabilities. The statement of activities, which is your P&L, your profit and loss statement, income statement, which is your revenue and expenses. Functional expenses is just the breakout of your expenses by program area. So again, either program, your administrative expenses, your fundraising, et cetera. The statement of cash flows, which we've talked about, your cash in, your cash out. And then the footnotes. The footnotes, I have to tell you, those were always the first thing I looked at when I would review an audit. It's the story of your organization that I want to know about. This is where you find things that your financial statements might not tell you. For example, I'll never forget this. This is years and years and years ago. An organization was going through bankruptcy. I would have never known that looking at their financial statements. But it's important to know as a funder, if you're reviewing that this is an organization that's struggling. It doesn't mean that you don't fund them. It's a part of your review process. Subsequent events are things that happen after the end of your calendar or fiscal year, your audit period, but they're still important to know. For example, did your building catch fire and you've had to cease operations for a period of time? Those are really critical things to know that you aren't going to find in your financials. It might have happened after the closeout of your year, but it's still really important to note because it changes the viability of your organization. Okay. Tips for managing an audit. Before I get into this, any questions or yes?
I may have missed this, but are audits mandatory for a $100,000 nonprofit with no paid staff?
Oh, that's a great question. Are audits mandatory? The IRS has no requirement for audits, at least within the last couple years, unless they've changed that, which I would be surprised. States are going to have requirements. I would say that a $100,000 audit is not, when you're looking to engage an auditor, you have to do the cost-benefit analysis, right? Is there a benefit to your organization by incurring that cost? At $100,000, probably not. It must be in my audit presentation, so I apologize. There are certain triggers where I would recommend an audit, or at least recommend that you review it. $500,000 is kind of is a general guideline. But then you also have to look at, do you have additional staff coming on? What's your organizational risk? If you feel like there's a risk to your organization, maybe some fraud's happening or something, you should definitely talk to an auditor. As you're expanding, growing, changing, like maybe if you're expanding locations, those are some trigger points. There's no legal requirement from the IRS. There is a requirement, as was pointed out earlier, if you have grants of $1 million from the federal government, you're required to have an audit. But those are varied by the funding source. So some foundations or funders may require it. They won't require it at $100,000 is my guess. Federal governments and then states have certain requirements, but in the state of Kansas, you're not required with $100,000. It's a great question.
Thank you. How often should you do an RFP to regularly change auditors or at least consider changing auditors?
That is a great question. As a best practice, I know that you should change your audit partner in charge of the audit probably every 3 years. Now, that's assuming you have a larger firm that you're working with and you have options for changing out that partner. To my knowledge, there's not as much guidance, if you will, of the audit staff person, which I find actually that person's the one that gets close to your organization. So I would even encourage you to look at a new audit field person, even if you're staying with the same firm, probably within that 3-year period. You want some continuity, but you also need fresh eyes, right? And that independence, if you will. You don't want to get too close to your auditor. You want to be friends, but not too friendly, right? As far as an RFP, some organizations have policies that say every 3 years, every 5 years, we go out for a bid process for any contract that's over X number of dollars. I would say in that 3 to 5 years is probably a good guideline. It doesn't mean you have to change though. But I would say you should change your audit partner and potentially the fieldwork person every 3-ish years.
What are some key things that we would want to look for if we are going to have somebody come in to do, whether it's an audit, a financial review, or the compilation?
From an audit firm perspective, what questions should you ask? I think the things that you should look at are, number one, have they worked with other nonprofits? Because if they haven't worked with other nonprofits or like nonprofits, you don't want to work alongside them when they're learning the same thing, right? So I would definitely say somebody who understands nonprofits and maybe even similar type nonprofits. Nonprofits are very different, right? So just because they have nonprofit experience doesn't mean that they're going to be a good fit for you. But I would also reach out to peers that are like organizations and say, hey, who do you talk to? Who do you use? Who do you recommend? Who do you not recommend? Like that's as much of an important question as anything, right? So that would be my recommendation. Any other questions?
Oh, sorry. Do you want to hold it? Okay. If we have, so my organization has an outside CPA firm that does our 990. Should you get someone else to do your audit, or is it okay to have the same people?
It's absolutely okay either way. Oftentimes your audit firm will also prepare your 990 because literally you just take that information off the audit and it kind of flows nicely into your 990. There's a lot more to the 990 than just the financial information. I mean, how many boxes do you have to check? Yes, no, yes, no. And then there are disclosures and that sort of thing too. But it's okay to use separate too. But it's absolutely okay to have it be the same. I think the most important thing is just that independence, you know, making sure it's not your neighbor, a board member, that sort of thing. Any other questions?
Okay, I think it'd be nice. Just a suggestion that from this group, it'd be nice, or from Sunflowers. I don't know who gathered the data, but a list of all auditors or people who do financial reviews that we can contact. I mean, because sometimes it's very limited. I mean, you call a lot of people not taking new cases so it'd be nice if we can gather information on some of the reviewers or auditors that's doing nonprofit organizations.
Sure, I will say, and I can't speak for the foundation, I do not represent the foundation. I think the challenge there is if you give a list, it's perceived as we recommend or we think these people are okay and like they're not doing due diligence on them. The other component, I appreciate your request significantly because it is a process. It is a very hard process, is the geographic components of this. And auditors change a lot, like who's doing audits, who's not. Auditing is a very specialized field, and not all CPA firms are doing auditing. Actually, it's a pretty limited number, so it's a tough area.
I just had a follow-up question on her question. We have an internal bookkeeper, and then we have a CPA firm that assists with other financial functions and everything. I assume it's best practice because we don't use them then for our audit. We have a separate auditing firm, and that would be best practice too because, right, they're part of the procedure, so you wouldn't want them involved in the audit as well.
I think it depends what your scope of services with the accounting firm is.
Okay.
If they are advising you on transactions, that type of thing, you definitely, they're almost auditing their work, right? So you would want that independence, but it kind of goes back to, it's a little gray. It goes back to what's your relationship with the accounting firm. So I'm not sure that answers it, but. Okay.
That kind of goes along with my question. We're looking for a new CPA firm.
Sure.
And so we're going to send out some RFPs. Would that be good possibly to have them do the audit? Would it be good to have the same company do the audit? And we're from Wichita. So if anyone has any good CPA firms for a small nonprofit, we would appreciate that information.
So can I ask you a question? What do you use your CPA firm for? What's the, like, again, it goes back to the scope of services. What are you asking them to do? Should they be the same or should they be different? Are they, recording transactions? Are they kind of an outsourced CFO kind of a thing? Or it goes back to the scope of services, whether they should be the same or different.
Okay. That helps.
Okay.
I just had an idea. There's a lot of wisdom in the room. Maybe we could use these sticky notes to share information out in the outer room on the names. Can we do that? To put sticky notes out there on the names of organizations.
I got two
Elizabeth
thumbs
is
up.
saying yes.
I got 2 thumbs up, so
Okay,
absolutely.
so put the power of sticky notes to use. And if you have a specific city that they're limited to, or if they're statewide, that might be helpful too. Yeah.
You
Okay,
guys have
stupid
to-
question. Is there such a thing that auditors are limited to what state they're allowed to audit in?
I'm not sure I could answer that question. I don't know that they're limited by, I don't know the answer to that. I can find out over break, if we take a break in a little bit. Let me find that out. I think I would caution in using an outside of the state, or a firm outside of the state, is they're going to have the same policies, the same guidelines, the same rules they have to follow. The only difference is understanding what the state requirements are. So they may not be as in tune with the state requirements. For example, state filings, state, like if you hit this threshold, then you have to do this. They just may not be as in tune with those things. So you don't want your auditor to miss something because they just don't know.
Just a general comment on what they said. As me being a past auditor, it all depends on the scope of the company. Some companies are just citywide, regional-wide, statewide, but you have some big companies, I think the big 6 now, they international, they go all over the place.
Right.
So it all depends on the scope of the company you are signed the audit to.
Thank you. You guys are full of great questions.
So we use a firm in Denver, and we chose them because they love small nonprofits and they do a lot of teaching. And our accountant, because we were brand new to this, held our hand, worked with us on everything. They have bookkeepers all over that also are experts in nonprofits to help with like some bookkeeping things. So I at least for the firm that we use, they can do it from anywhere. And she comes to she zooms into our board meeting to go through the whole 990 with the board. It's an amazing relationship that we have with them, but I've never met them in person. But so there are firms that do that really have the patience and the passion to teach you and walk along with you while you learn this.
I love hearing that because audits don't have to be hard. They don't have to be, painful. But having a partner like that helps you along the way is a blessing. So. Any other questions? I'm going to keep going unless. Okay, so tips for managing an audit. Find a firm early. I talked about this a little bit. There's a huge shortage of accountants coming out of school. There was an article in the, Wall Street Journal or something like that about 6 months ago that it was kind of scary for, especially for nonprofits who, you're not going to have those big budgets like your larger firms are going to have, and CPA firms are being a little bit more picky in what they're taking on. So I would say start early. Do an RFP process if you can. You might be generally limited depending on your geographic region. You might have 2 options or 3 options. Looking outside of the state is not necessarily a bad option, but again, it goes back to, are you as an organization okay with a remote audit, or do you really want somebody on site for your first go at it? Do interviews, talk to other organizations, look at the sticky notes. That's a great idea. But definitely start early. Audits take time. Manage your staff time. It's really important that you dedicate the time to do this process and do it well. If you're struggling with 1,400 other things going on at the same time, you're going to be frustrated. Your auditors are going to be frustrated. And it just makes for a really clunky and uncomfortable audit process. So manage your staff time and set those appropriate schedules. Keep financial orders and keep your financial records in order. I know that sounds kind of basic, but the more your financial statements are ready to go for your auditors, it makes for a better process for you. Make those adjustments if you need to throughout the year, your depreciation schedules and that sort of thing. But just keep your records in order. We've all heard about those people, and I'm not calling anybody out here, but where you take your shoebox to your CPA at the end of the year and you want them to do your taxes, it causes a clunky process. The first year is going to be the toughest year. You're learning, you've got all these records that your accountants are asking for, but as you move into your second and subsequent years, audit preparation should happen throughout the year. You know that the auditors are going to ask for any new lease. You know that they're going to ask for bank statements. You know that they're going to ask for grant applications, agreements, etc. As you're going through the year, put that aside in an audit file of some sort, whether it's electronic, hard copy, whatever. And then when their auditor hands you the list at the end of the year, you've got a good chunk of it already ready to go. Rely on your audit team. They are there to help you. They can't give you specific guidance on how to enter a transaction or those types of things, but they can be educational and helpful along the way. If you don't understand something, it's critical that you ask them because it might be a big deal for your organization. If you don't know how to answer it, I really encourage you to just work with your auditors and ask questions. Relax, breathe. It's a process, but you'll make it. The IRS Form 990 is the annual filing that you must file every year. I believe it's a 5.5-month process. So if you are I should have confirmed this. If you're a calendar year, you have until May 15th, I believe, to file that. You can file for an extension. It gives you a 6-month automatic extension. From an optics perspective, that might frustrate you if you have to file an extension. There's no legal reason or anything else that to keep you from doing that if you just aren't ready to file your 990. But your boards may require you to do it in a certain time period. You might want to have that done for, again, a grant funding opportunity coming up, et cetera. It is required for every nonprofit. That's a change that happened a number of years ago. It used to be if you hit a certain threshold of revenue, but then the IRS came out with the 990N. I don't know, it's been a number of years ago. The 990N is basically, we're still here. Here's our name, here's our address, and our tax ID number. It doesn't get into financial information or anything as long as your revenues are under $25,000. And then the 990EZ and the 990, they're just different levels depending on the level of activity. Again, the 990s are more than your financial information. They contain management information, governance functions. There's a lot of disclosures and schedules and that sort of thing. And I will tell you, it is critical that your organization go through that. I know when I was presented a 990, I would go through it, every single daunting question, and they're hard, but you have to go through that because your auditors or CPA firm are answering those questions based on the information they know, but they may not know one specific thing, and that box gets check marked wrong. So it's your responsibility as an organization to make sure that's accurate. Your CEO is signing that, your board members, whatever. So it really is your responsibility as an organization to know what's in that 990. So, questions before I go on?